Good morning, I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market update for Friday, February 11th. We're seeing losses in the early going on Wall Street as investors digest the latest data on the international trade. The U.S. trade deficit widened by nearly 6% in December to $40.6 billion. But that was a smaller increase than economists had expected. For the full year, the U.S. trade gap totaled about $498 billion. A nearly 33% increase over 2009's level. And the deficit with China hit a record high $273 billion.
Following that report, gold turned higher and is now trading at about $1,365 an ounce. Treasury prices are also rising, and the U.S. dollar is jumping against other major currencies as investors look for safe places to park their money. They're backing away from riskier assets as the political situation in Egypt continues to deteriorate. The protests in Cairo have gotten even larger after President Hosni Mubarak refused to step down yesterday.
Investors are also looking over the Treasury Department's report on Fannie Mae and Freddie Mac. The government plans to make the firms much smaller, and the fees that they charge to guarantee mortgages will increase over time. The moves are designed to ease the private sector back into the housing market and may also include reducing the government's role in the mortgage market, setting up a catastrophic risk insurance fund, and offering reinsurance for securities of a range of mortgages. Shares of Fannie Mae and Freddie Mac are worth a fraction of their former value. They're both sharply lower this morning and are trading at well below $1 a share.
We're keeping an eye on Nokia today. It's falling more than 11% in New York and Helsinki after announcing sweeping strategic changes. Nokia will begin using Microsoft's operating system in its smartphones in an effort to compete more effectively with Apple and Google. Analysts say its current operating system, Symbian, is not a competitive platform. In addition, Nokia will reorganize its leadership team to allow for faster decision-making and revamp the structure of the company. It will now have two distinct units, one for high-end smartphones and one for mass-market handsets. Since 2007, Nokia's share of industry profits has plunged from 67% to just 17% last year, and the company's CEO said earlier today that significant job cuts are on the way.
Another stock losing ground in early trading is Kraft Foods, down more than 2% right now. Kraft posted a 24% decline in quarterly profit due to weak consumer spending and higher costs for raw materials such as corn, wheat, and coffee. The maker of Oreo cookies and Oscar Mayer products did post a 30% increase in revenue, but that was mainly due to its acquisition of the British chocolate company Cadbury. Meanwhile, one of the day's biggest stock losers is Expedia. Net income at the online travel services company fell 30%, missing analyst estimates. Right now, Expedia shares are tumbling nearly 15%.
One stock bucking the downward trend is Ford Motor. It's adding about 0.5% on top of a 46% gain over the past 12 months. Ford announced that it will reduce its debt load by another $3 billion after cutting $14.5 billion a year ago. The automaker is trying to shore up its balance sheet and save nearly $200 million a year in debt costs. That's the latest from Weiss Research. Have a good trading day and a great weekend.